Good morning. It's Wednesday, October 9th, about 6 a.m. Central Time. We got a lot to unpack on this video. So overnight, the precious metals are mixed to slightly higher after yesterday's aggressive China-related sell-off. To recap, and this is important for the trajectory of many of the markets that you guys trade, China had failed to follow through with additional stimulus measures on Monday night. The base effects were felt in China-related commodities. At one point, from the overnight highs to the trading session lows, we saw aluminum down $100, copper down 16 cents, silver down $1.60, and gold was down $50. Gold was more collateral damage than anything. There were no real developments with the economy as there was a lack of economic data being released. The gold-silver ratio sits at 85-1, and gold has somewhat isolated itself from these other China-related commodities. Now, some of these commodities, the losses were recovered by the end of this session in some capacity. So we saw all these commodities, the short covering was lifted, or the bargain hunters, which many of you working with me were calling in, and we were establishing new net longs at some of these lower levels. So it's quite easy to bundle all these commodities together, but it would be a mistake to point the finger only at China because additional outside factors right now are acting as some headwinds. The recent economic data suggests a bit of a more robust commodity that was led by the jobs report last Friday with the blow-away number, the downtick in the unemployment rate, and the Fed is likely to cut 25 basis points. Recently, we've seen a rise in the dollar off of its double bottom lows, and we saw gains in the two-year treasury yields, where right now they're trading at about 3.91, and you have the 10-year back over 4%. So the recently released economic data, in my opinion, probably going to be a bit inaccurate here because of the close proximity to the election. Is it manipulation? I'm not going to speculate on that. We've got to play the game we're in, not the game that we want. We did see the Bureau of Labor and Statistics have to revise down massively about 800,000 jobs over a one-year period that were overstated before. We're probably seeing that right now, and that's what's probably weighing in a bit on the direction of how the Fed is taking policy and then how some of these metals are trading out. Now, looking at the overnight trading session, you do have December gold up about $5 right now at $26.40. The high of the overnight session, $26.42.90. So we're lifting off of that support level that I identified, which was $26.20 in yesterday's video. You go to the silver market, we are trading at $30.93, up 32 cents, which is a 1% move. Low of the session, $30.63. And if you look at that, we didn't come very close to the $30.03 level. I believe that that is the larger line in the sand. I believe that where traders would enter into new longs and put stop losses below that for risk management purposes. Why? Because that was the low from the Federal Reserve meeting and basically takes out the 50 basis point cut that we saw if we break below that level, which would be quite alarming. Now, the copper market down 370. We did have the Chinese equities in the overnight session. They were hit pretty hard again, so naturally copper prices are going to come off with that. Looking at platinum, that's the only one that shifted a neutral trend. Platinum is a bit of its own animal. It looks at 51% is driven by automotive demand and automotive as far as where platinum goes, is in that automotive sector. 16% of it goes into jewelry. No telling what this Costco selling platinum bars is going to do to that market. But if you look at Eskom in South Africa, they've had no real mining disruptions from power outages and things like that. So remember, you have a checklist for every commodity that's out there. Looking at crude oil, a little bit softer. Equities, a little bit softer. News that they could potentially try and break up Google. So looking at the CME's Fed Watch tool, 11% chance they leave rates unchanged, 88% chance that they do end up cutting 25 basis points. So the question that I have for myself and what I do at night is I start to focus and think about where things are going, because China coming out and not providing the additional stimulus changes the trajectory of many of these commodities. So the keys to successful trading are practicing emotional discipline, using risk controls, following a principle and process, focusing on the markets, tuning out the noise, paying attention to the aspects that impact the commodity that you trade. So you want to be very objective, calculated, and have no emotions. Once things line up, then you take action. In the meantime, if you're going to trade some of these commodities because of a small derailment of some of the things that are happening, like the Fed's not cutting at 50, China is not providing that stimulus, you want to trade small, use tight stops, focus on your mental trading game. That's why I said that people would look at silver and they would look to establish some positions with stops below that key level. So the question remains, and the question that I have, this is what I was thinking about yesterday. Is all hope lost for $50 silver and $3,000 an ounce gold? So that mental checklist that I have, I also journalize that every single day. I write down what I'm thinking. So for instance, I had a client and I had several others that have been saying, hey, these equities, this thing's in a bubble. It's going to blow up. Well, if you look at now the S&P 500, and I'm going to come back to gold and silver, it trades at 20 to 21 times forward guidance on earnings. You go back to 2000 when we had the dot-com bubble, 45 times earnings, and you look at 2009 with the housing crisis in that bubble, 200 times earnings. So you go to what about the tech? So NASDAQ on this crazy trajectory. The Magnificent Seven trades at 20 to 25 times earnings. And then if you look at the dot-com bubble, those high-flying tech stocks were 200 times earnings. So my checklist for gold. So as long as the Fed feels comfortable with disinflation, okay, inflation coming down, they should cut rates to the neutral rate. That's called the terminal rate. That's where they stop cutting rates, okay? They are happy where they've achieved. They've reached their destination. That's 3.5 to 3.25%. In September, we saw 21 cuts from central banks globally. Now, for reference, during the COVID peak, it was 49. So globally, we're cutting rates. That's why gold futures in September had achieved all-time highs against almost every major currency that was out there. Now, the decline in real yields should keep a lid on the dollar. The decline in real yields comes from the Fed continuing to cut rates. That's why it's important to have the 2-year yield on your chart, the dollar index on your chart, and you keep monitoring these different things. So what we need is we need central bank buying to continue. We need geopolitical tensions to remain elevated. Historically, the ETF investor does not come into the gold market till about 30 days after the first interest rate cut. Why is that? Because most investors work with registered investment advisors that need confirmation in order to make rotations. We are a registered investment advisor, so if you want to talk about equity portfolio solutions and long-term wealth management, we could do that too. So once this happens in its confirmation, just like they rotated out of tech and into the small caps when they felt that the Fed was going to make its first interest rate cut. So now you need to also see a few other things. We need to have China on board. Those households in China, 70% of their net worth is tied into their household. They need to look at gold as an alternative asset when the reserve ratios are cut, and then boost that gold holding. So you get all those different things, you get gold moving to $3,000. The checklist for $50 silver is essentially many of those same tailwinds I just listed for gold because of the close correlation to it. But remember, 54% of it is going to be industrial demand. You also need mining supply constraints, which I think you have and you'll continue to get if you get the current administration going because of their green energy initiatives, their hard stance on the environment, things like that. It's harder for mines to operate with those types of things, and especially bring on new mining operations. So you also need the infrastructure spending in China, the drawdowns in COMEX inventories, and the increased ETF demand. They tend to be late to the party on silver, so you need 32.50, 33, 35. You'll get the tailwind from the ETF, guys. So then you also need the more robust Chinese stimulus. Now, the thing about China is Sunday night, they are going to meet again and discuss what's going on and what just happened. and the lack of follow through. So this is why Sunday night is going to be important again for China and stimulus. They may announce measures there. So that's why you probably need a futures trading account in case that market shoots up. And then by Monday morning, it's unchanged on the day, and you're not able to get out of your SLV options, your mining stocks, your mining options. You want to have the futures trading account. Now, today, we are going to have a couple Fed speakers. We have Bostic, who's an FOMC voter. You also have wholesale inventories, Goolsbee, who's an FOMC voter, and then you have the FOMC minutes. This is very important. The FOMC minutes, the shift in focus for the 50 basis point cut was from the inflation, or from the labor market, no, from the inflation to the labor market. Now the labor market's doing well. Inflation is coming down, but you have all these higher base effects from the conflict in the Middle East. They may have to shift their narrative going forward as far as what they're doing, but we'll get details on what their primary focus is. So you guys got any questions, you give me a call. Lot longer video here, but I had a lot on my mind as I was thinking about this yesterday as far as the question, is all hope lost for $50 silver and 3,000 ounce gold? Another thing is, what's your time frame on it happening? I'm still a young guy. This could happen in 40, 50 years. So, but for others, it might not be such the case. So, got any questions, give me a call. 312-858-7303. Remember, futures and options trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.